2.6 million Americans just defaulted on their student loans. Not late, not behind, defaulted. And most of them had no idea it was coming, because these weren't reckless borrowers. These were people who were current on their payments back in 2020. Then a pause hit, 5 years of silence, no payments, no interest, no consequences. And then, without warning, it ended. Wage garnishment is coming back. Tax refunds are about to get seized. Credit scores just dropped 91 points in a single quarter. And if you think this is just a student loan story, it's not. This is what happens when the government freezes a financial obligation for half a decade, then flips the switch back on overnight and barely tells anyone. So let's break down exactly how this happened and why it's about to get a lot worse. Rewind to March 2020. The pandemic hits. The government pauses payments on almost every federal student loan in the country. No interest, no collections, nothing. What was supposed to last a few months lasted 3.5 years. Payments didn't officially restart until October 2023. And even then, there was a built-in grace period, an on-ramp, where missed payments still didn't hurt your credit. That grace period didn't actually end until September 2024. So really, this wasn't a 5-month pause. It was a 4.5-year vanishing act. And here's what nobody talks about. When you remove a bill from someone's life for 4.5 years, their brain doesn't just remember it's coming back. It restructures everything around its absence. Meet David, graduated 2018, $38,000 in loans, paying $340 a month like clockwork. Then the pause hits, and David does exactly what any reasonable person would do. He redirects that $340, builds an emergency fund, qualifies for a car loan based on his new lower monthly obligations. Maybe even a mortgage. David isn't reckless. David is responding rationally to his actual financial reality. But that payment never disappeared. It was paused, not forgiven. And when it came back, David wasn't resuming an old bill. He was reintroducing a $340 hole into a budget that had spent years being built without it. Now, multiply David by 40 million borrowers. And here's where it gets messier. During those years of silence, loan servicing companies got reshuffled. Some exited the federal loan business entirely. Millions of borrowers had their loans transferred, sometimes more than once, often without any clear notice of who now owned their loan, what portal to log into, or what they even owed. Imagine sitting on hold for an hour with customer service, getting transferred twice except it's tied to your credit score and your legal obligations. That was the reality for millions of people during the most confusing bureaucratic transition in the history of federal student aid. A quick pause because this video is sponsored by Gamma. When I'm researching something this dense, pulling Federal Reserve data, Department of Education timelines, servicer transition records, it's an overwhelming amount to organize. Gamma turns that chaos into something clean. I upload my research through Claude, connect the Gamma integration, and it builds a structured deck automatically. New data comes in, it updates itself. It also connects to GitHub, Notion, and Gmail. If you want to check it out, head to gamma.app or find it inside Claude connectors. Thanks to Gamma for sponsoring this video. Now, here's the number that should stop you. 2.6 million borrowers defaulted in just the first quarter of 2026. That follows nearly 1 million defaults in late 2025. In 6 months, close to 3.5 million Americans crossed the line from delinquent to officially defaulted. The average age of these newly defaulted borrowers? 39. Not reckless 22-year-olds. People mid-career, often supporting families. People who were paying on time before the pandemic ever happened. And their credit scores just dropped an average of 91 points in 1 quarter. That's not a minor inconvenience. That's the difference between qualifying for a mortgage and getting denied one. That's a car loan interest rate jumping several points. That's apartment applications getting rejected. But here's the part that should really concern you. Federal student loan default isn't like defaulting on a credit card. The federal government can garnish your wages directly from your paycheck without ever taking you to court. It can seize your entire tax refund. It can even offset Social Security payments for older borrowers who co-signed loans decades ago. And right now, those collection powers are paused, temporarily. Multiple reports suggest that pause is expected to lift in the coming months, which means millions of people currently sitting in default who haven't felt any real consequences yet are living through the calm before what could be one of the largest waves of wage garnishment in modern American history. Total federal student loan debt right now sits above $1.7 trillion, spread across more than 40 million people. This isn't a slow-building crisis. It was essentially manufactured, a 5-year pause, followed by one of the most confusing unwinds the loan system has ever seen. And here's the disconnect that should bother you. GDP is technically growing, consumer spending is up, corporate earnings are beating expectations. On paper, the economy looks fine, but millions of households are living through what functions like a private personal recession, one that never shows up in GDP numbers because these people still have jobs. They're just now carrying a default that's about to work against every other part of their financial life. So here's the real question. If 3.5 million people defaulted, not because they refused to pay, but because of a policy transition rolled out in the most confusing way possible, is this actually a story about irresponsible borrowers? Or is it a story about a system that made mass default almost inevitable, and then barely explained the consequences? And if you're currently behind on federal loans, the moment to act isn't after wage garnishment notices start arriving. It's right now, before collections resume, while rehabilitation and income-driven repayment options are still on the table. That's why I made this channel, because the financial stories that actually affect people's lives rarely get explained with the context they deserve. If you want to understand what's really happening before it becomes tomorrow's headline, hit subscribe, because the next quiet crisis is probably already unfolding somewhere nobody's looking.